Hello everyone, welcome to today's live stream. It's the Octa live trading session and my name is Ambrose. It's super amazing to have you guys here today. In live trading sessions like this, we go into some important details. I walk you through how, some steps on how you can be more confident and more successful as a Forex trader. Again, my name is Ambrose Ebuka, and if you're just joining, you can let me know in the chat your name and where you're joining or watching me from. And you can also tell me if this is your first time, taking part in an Octa live trading session. While you do that, I'll just go over a quick disclaimer. Any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as a general market commentary and does not constitute investment advice. Okay, brief introduction about myself. My name is Ambrose Ebuka. I have half a decade of trading experience. I've honed my trading proficiency and I've contrived various profitable strategies that includes swing and scalp trading. I mean, while this live trading session goes on, if you don't know what swing trading, scalp trading, and other styles are, I'll do well to explain them to you during this session so you can understand better. I analyze gold, which is XAU USD, GBP JPY, and GBP USD charts with an outstanding accuracy exceeding 85%, and I regularly backtest trading strategies for effectiveness. It's an evolving market, new things are happening every day, and the market is not always trending in one direction. So you always have to create that vacuum as a trader, that vacuum for learning, because in the market, learning never stops. So the agenda for today, we're going to look at the economic calendar, which is, what I always do when I come on these live sessions. If this is not your first time and you've been participating in my sessions, you would notice that I like to tell you guys to always check the economic calendar. Very important, because this is a major driver of market prices. And we'll look at the ZapZone strategy, which is what I use. I'll explain how exactly you can use that from the higher time frames all the way, down to the lower time frames. Terence, hello, or Terence, if I pronounce your name wrongly, forgive me in advance. Thank you for joining. Emmanuel Israel from Nigeria, thank you for joining. Okay, we'd also review the DXY currency, which is the dollar index. I would also explain what the dollar index is if you don't know. Just stick around and you would find out exactly what it is and how and why it's important for your trading career. I'd also look at the correlation between the dollar index and other pairs that you would most likely be trading if you're new to this market, and even if you're already an existing trader. And I'll have a session for Q&A, which is where you can ask me all your questions and I would also ask you questions. So it's very important that you're active in the comments and you're active in this session, because I'll be asking you some questions relating to what we've talked about today. Now guys, in the course of this training, in the course of this session, if you have any pairs, any currency pairs, any instruments, because I know some of you probably trade stocks with Octa or even commodities, metals and all that, you can always type it in the chat. If you have some pairs that you want me to analyze, you can type it in the chat and I'll go over the pair and we'll analyze them together. And if you have any trading related question as well, during the Q&A session, I'll answer your questions, but it's good that you type them so that during that Q&A session, I can just scroll and answer your questions, okay? This session is going to last for about 45 minutes. And just like I said, use the YouTube live chat to ask your questions during the webinar, and I'll periodically check it all and answer them. I'll be happy to answer all your questions. Guys, today we'll look at, some steps that I use to develop and create a solid trading plan. I'll also show you how to spot profitable opportunities in the market and how you can manage your risk effectively. I'll give you guys some tips to manage your risk effectively. I'll also show you how to get started quickly and get started right. Okay, so it's not just about getting started with trading, but it's also important that you get started the right way. How to balance your assets and your portfolio for long-term success. Now, this is it's going to be an amazing session, whether you're a beginner trader or you already have an experience in the market, there's always something here for you. So stick around so you can grab it and improve in your trading career. Hello, Hitawa. Thank you for joining. All right, guys, we're going to dive right in. But before we do that, I'll just briefly talk to you guys about the strategy, which is the ZapZone strategy I said I was going to explain to you. Very important that you understand, how this strategy works, because most of the analysis I'll be doing revolves around this particular strategy. Okay, so pay attention so you don't miss out on some of the important details that you would need. Now, it's called the ZapZone strategy, and it's a strategy that, the name is the name that I created, but the strategy is a strategy that has been existing long enough, even before I was born, because it's zone trading, right? Supply and demand trading. So with the zone trading, in simple terms, what you're basically doing with zone trading strategy is you're trying to capitalize on different zones in the markets. Now, there are only two things the markets can do. The markets can either trend or the markets can range. Now, even if the market is trending or the market is ranging, it would most likely respect key levels. It will most likely respect important zones or important areas of supply and demands. Now, zone trading in the Forex market involves identifying specific zones on your chart where the price is likely to react or reverse. And these zones, we can identify these zones based on historical areas of supply and demand. We can also use some indicators like the Fibonacci retracements and trend lines, and also the moving average as well, to potentially identify these areas of supply and demand. Now, the concept or the objective of using the zone trading strategy is to focus on opportunities that are being provided in the market within these predefined zones, rather than trying to predict price movements outside of them. I'll go over to the chart and explain that to you, but let's just focus now on what is included in the strategy. First, your understanding of market structure. Now, this is a kind of defined way to put it, but there's a lot involved with understanding market structure. And one of the ways to understand market structure would be to identify and perceive the market at first glance. The trend, the range, you're able to see that even without drawing your trend lines and your horizontal lines. How can you spot a trend? By identifying consecutive higher highs and higher lows, or consecutive lower highs and lower lows. Now, without your trend lines, without plotting anything on your charts, you should be able to just immediately spot an uptrend or a downtrend. So your understanding of the market structure would involve, identifying trends using the candlestick chart patterns, identifying a ranging market, and also identifying areas of significant supply and demand. This is the first step. Once you are able to identify this, every other thing becomes a bit simplified. Actually, simplified, because now you've identified the trend. The reason for identifying the trend is to know if we're going to continue in that trend or we are at a point of reversal, which I'm going to show you in the dollar index chart right now, because that's what we are basically doing. The second thing you want to do is to identify key levels. Now you've seen the trend, you're able to identify this trend. This is an uptrend. I'm seeing consecutive higher highs and higher lows. Definitely an uptrend. What are the key levels? The key levels are going to be your areas of supply and demand, areas of support and resistance. All right, and you can use your trend lines to identify that. You can use your horizontal lines or your moving average, or even the Fibonacci retracement tool for pullbacks. You can also use that to identify key levels. The key levels are areas on your charts where price could react or reverse. Price has already acted upon that level, and price could potentially come back to act at that level. All right, so identify that. The third thing you want to do, or the third thing that is included in the ZapZone strategy, is to predetermine your entry and exit points. Now, this can also serve as your framework. And by framework, I mean your guide, your step to analysis. So you predetermine your entry and exit points. Now, I know some of you would wonder why this is included in the strategy. The reason for this is because this is an all-inclusive strategy that covers not just the economical aspect of trading or the technicals, but also the psychological aspect of trading that involves your risk management. Now, if you're able to come into the market and analyze the charts, you've seen the trend, you've seen the range, you've seen your key level, you've looked at the chart, and you're looking at the price detail that is shown on a candlestick chart. You're seeing the information that is being given. You're seeing probably the emergence of a bullish momentum candlestick, and you know that when bullish momentum candlesticks or engulfing candlesticks form, the buyers are taking over, right? So you conduct this analysis and you've seen your entry point. The reason for also identifying your exit point is so that you don't get caught up in the middle of a swing trade, or you don't get to make rash decisions. You don't get caught up in the middle of a range, or you don't get to make, rash decisions. A lot of traders execute the trade and let the price or the profits or the drawdown determine if they should close or where they should close. No, the ZapZone strategy is an all-inclusive strategy that helps you understand this is where I want to enter the trade and this is where I'm going to exit. Now, by doing that, you've eliminated anything that has to do with rash decisions or emotion trading, because you've identified your entry and your exit. Now, the area of risk management is where you also have to minimize or manage your risk, if I should use that word, because minimizing with risk management, you are able to manage your risk within your tolerance. Okay, but when I say minimize your risk, then it's like most traders don't like to hear the word minimize your risk, because we have different, risk tolerance for different traders. But at the end of the day, if you're able to manage your risk and stay in the market longer, it would give you the potential to place more trades and even make more profit. So risk management in the Forex market is something that cannot be overemphasized. It's something that is important. And these are the things that are included in the ZapZone strategy. Now, if you're able to go through these steps from 1 to 4, you would not just understand and position yourself for high probability trades, but you would also eliminate the decisions, the emotions that comes with a drawdown trade. So you would not feel like you have to make rash decisions. You would not feel uncomfortable with that trade, because now you've identified your risk. You're confident with your entry level. You're confident with your exit level. Your exit level would also include your take profit and your stop loss. You're confident with all that, and you can go ahead and let the trade run. So this is why it's important, to have this guide and follow through this guide. So if you haven't already, you can write this down or take a screenshot, or better still, you can always come back to watch this video. It's going to be saved in the Octa Broker YouTube channel. Now, what kind of traders is this suitable for? If you made it up to this point, congratulations. Now you've understood what the strategy consists of. At this point, you'd figure out if the strategy is suitable for you. I mean, it is. We have zones in all time frames, but you would be able to understand what type of trader you are. A lot of traders don't know what kind of trader they are. They just come into the market and I'm able to analyze the market today and tomorrow, so I'm a trader, right? But we have different trading styles for different type of traders. And what's important about your trading style is, if you want to make your journey, this is especially for beginner traders, if you want to make your journey easier for you, if you want to make your trading journey easier for you, very important that you look at your personality and kind of merge that with your trading activity. What do I mean by that? So if you're an impatient person, it will be a bit difficult for you to understand the swing trading strategy and for you to be able to hold trades for a long period of time. The impatient person would go well with scalp trading or even day trading. It's going to be difficult. I mean, I'm not saying you would not understand it, but it will be a bit difficult for you to hold trades. Imagine holding trades for like 5 days. It's not something that really goes on with your kind of person, right? So that being said, I'll go ahead to explain the type of traders that we have, and then you see where you fall in, and you can direct your trading activity on that. Give me a second, guys. Okay, I just checked the comments to see if we have any questions, but we don't have any. All right. The day trader is a trader that looks to close their trades within the day. So the day trader comes into the market and analyzes the charts, execute trades with the intention or the hopes of closing the trade within the day. The swing traders look to hold trades for a couple of days or even weeks. So they don't really mind if the trade doesn't close in a day. These are traders that focus more on the higher time frames, like the 4 hours, the daily, sometimes even the weekly time frames. And you know, when you look at the higher time frames for analysis and even execute the trades on that higher time frame, then it's going to take a while for your trades for your financial results to be determined. The scalpers are the get in and get out type of traders. They come into the market to scalp. They just get in and get out. They spend a few minutes, trading. They look to just execute, enter, exit within a few minutes. The scalpers don't really look to spend a lot of time in the market. Now, the reason I'm explaining this is so that you know the kind of trader you are and trade according to that style. Okay, you might want to trade, because I scalp and I also day trade, and sometimes I hold trades for weeks, but you won't be able to do that if you're not able to figure out the kind of trader you are first. So you figure out the kind of trader you are, see if it correlates with the kind of strategy that you use, and from there you can start to diversify not just your portfolio but your trading style. And finally, the position traders. These are traders that look to hold trades for months, weeks to months, okay, and even years. Now, these are the different type of trading styles we have in the market, and because you can always find a supply and demand zone on every time frame, the ZapZone strategy is suitable for all types of traders. Okay, so this is a strategy that you can use for every trading style on every time frame at every time. So when do you use it? Very important also. The ZapZone strategy is a strategy that occurs, we need the market to move. We need volatility in the market, not during volatility, but after volatility, or after the market has been volatile, and then you're able to spot the trend, you're able to spot a range. If you try to use this strategy in between, let's say a news is about to be released, NFP tomorrow, for example, and you want to trade with a zone trading strategy during a news release, it's not really ideal to do that because it's a strategy that requires a zone. You need to have a clear supply and a clear demand zone for you to trade that. And usually during news events, you'd see the markets move wildly up and down. It wouldn't really create a clear trend yet. Only after the news is done and then or the reports are out, and then you can see the market start to move either in a continuation pattern or start to reverse, and then you can join in that. So you can use it after major news events or during volatile sessions when the market is moving and creating series of higher highs and higher lows. In a ranging market, obviously what you'll be looking out for would be how the market reacts to supply and demand zones. So if you want to use this for a range, then you just be looking at the limited supply and demand zones. But it's important that you use strategy for trending markets or breakout and retest strategies. Okay, let me know in the chat if you guys understand exactly how the strategy works and what kind of trader you are, and also when to use the strategy. We're going to go straight to the charts right now, but before that, let me know in the chat if you understand how the strategy works and when to use it and what type of trader you are. So with the explanation I just gave, what type of trader would you say you are? Do you think you're a day trader, or do you think you're a swing or a scalper or a position trader? I doubt I would get any position traders in the chart, but let's see. Let me know in the chart, guys. So before I go over to the trading chart right now, I just want to do a quick review on the Octa economic calendar, because like I said, when you come into the market and you want to trade, you first need to understand and identify if there are any economic events for that day. So you don't just come to the charts, analyze, and then someone just comes out, let's say the chairman of the Federal Reserve just comes out, releases a news, and you find yourself in the wrong trend or the wrong side of the charts. So very important that you utilize this feature or this tool, the Octa economic calendar. Very, very important. And one of the ways that you can do this would be to come to Octa website, octaafrica.net, and you want to come down to analysis and education, and then the economic calendar. Okay, Alani says he's a day trader. Terence says he's a day trader. Hitawa day trader. Jamba day trader. Oliver says he understands. Perfect. I had a feeling I wasn't going to get any position traders in the charts, but every style is a profitable style. Okay, the most important thing about trading is being able to do what works for you. All right, there are a million strategies in the world, but and also a lot of instruments to trade, but I'd tell you guys to focus more on what works for you. If you trade gold and you also trade Euro CHF, and you notice that you make more profit on Euro CHF than gold, it wouldn't really be ideal to force gold to work for you when you see that you can be the king of Euro CHF or the queen of Euro CHF, right? So it's really all about what works for you and what gives you profit in the market. And then if you want to diversify, you can just start doing that. But at least you have a consistent pair and a consistent method of trading. We have a position trader in the chart. Umar, he says he's a position trader. Amazing, amazing. Again, guys, the position trader holds trades for weeks, months, and even years. And you must be a very patient person and you must be trading with a very large sum of money to be able to do that. But yeah, it's also a trading style. And like I said, all trading styles can be profitable for all traders. Now, back to the economic calendar. This is what it looks like. Really beautiful, really amazing, with a lot of information that you can use to identify, what reports or what influence these reports would have on the currency that you're trading. As you're seeing here, we have Euro. This is a German news, but it's going to affect the Euro. This one is also for the pound sterling. Euro as well, the Chinese yuan, and the US dollar. Now this is set to weekly. If I go to today's news, we don't really have a lot of economic events today. And one of the things you can do, right, especially at the start of the week, is to go to this week. Okay, because sometimes you can execute a trade today and the trade, no much market activity, and you have to keep that trade open. But tomorrow, an important news will be released. So because you have an idea of what's going to happen tomorrow, that can also influence the trade that you place today. For example, I am expecting NFP to be out tomorrow. Let me just show you guys. On Friday, non-farm payrolls to be out tomorrow. Now, because I am expecting NFP to be out tomorrow and I've seen the forecast and everything, it has already affected the trades that I placed today. Okay. And obviously, before the report is released, I would also adjust the positions accordingly. Okay, Kumar says he leaves his positions for weeks. So you're kind of a swing / position trader, but that's awesome. That's amazing. When I started trading, guys, let me just give you guys a quick background story. So when I started trading in 2019, it was really, really difficult for me to hold positions for that long, for days. I just got into the market and immediately I started scalping. And I think that's one of the things you experience when you start trading, especially if you start trading and you make a profit for the first week and you start to feel that you are the king of the market and you want to just get in, get out and just be fast with it. But, over time, you get to understand that patience is a skill that every trader must master. And it's an important skill, regardless of your trading style or the instrument that you're trading. Okay, so I'm just going to go back to today's event. Now, how do you read this economic calendar? Because I believe that there's some beginner traders in the chat. So how do you read this? I know that you have a lot of numbers here and a lot of information that might be confusing, but trust me, if you stay to the end of this video or this live session, you'll be able to understand not just the economic calendar, but how to use it on your charts. Now, let's say the first one, trade balance month over month. This is going to impact the Australian dollar. We're seeing that it's a high impact event. And usually we have three main types of events: the medium, the low, and the high. Or let me just start from the low, the medium, and the high impact. Now, just as the name goes, low impact events would bring about low volatility to the market, or low impact to the market prices. Medium, again, just medium impact, but high impact is expected to bring about volatility to the market. Now, for a news like this, if you don't understand what the trade balance means, you can just click on it and you'd see that Octa has provided a definition for you. And Octa has also shown you that if there's a steady demand in the exchange, this sentence right here, if there's a steady demand in the exchange for Australian exports, that will turn out to be positive, or it will turn into a positive growth in the trade balance, which should be positive for the Australian dollar. So obviously, the previous was at let's just say 6 billion, and we're seeing a result that is less than that. So this doesn't really give us a steady demand report, right? Because we're having an actual report that is lesser than the previous. It's supposed to be greater than the previous. The same thing for this one. So if you want to understand what the consumer price index, and CHF is a Swiss franc, so if you want to understand what it means, you click on it, you get the definition, and you want to also focus on this last sentence, which tells you that a high reading is seen as bullish for the Swiss franc, while a low reading is seen as bearish. Obviously, we got a low reading 0.8 less than 1.1. It's going to be seen as bearish. The ISM Services PMI, which is the Institute for Supply Management Services Purchasing Managers Index, also came out with a bullish indication, right? If you look down here, you'd see a reading above 50 indicates that the services economy is generally expanding, and it's a bullish sign for the dollar. So we have bullish reports on the US dollar. Now, one of the things I'll tell you guys about the economic calendar is your understanding of the economic calendar can give you a broader view of market movement. You can be able to position yourself for 600 pips, 1000 pips in the future just by understanding the economic calendar. But I wouldn't say that the economic calendar is an indicator to just dive into the market and start trading right away, because you can see a bullish report here and go to the market to buy dollar. But you need the technicals to tell you at what point you should buy the dollar, at what price you should buy the dollar. So it's a combination of your fundamentals, which is the economic calendar, plus the technicals, which is your understanding of, market structure, the key levels, and all that. Okay. So with that being said, let me know in the chat if you guys understand how to use the economic calendar and how to interpret the news. Let me know in the chat if you guys understand how to read the economic calendar and how to interpret the news. Okay, Alani is asking, how long does the effect or impact of a news expected to last or affect the market? Well, it depends on the impact of the news, right? If it's a high impact event, some high impact events like CPI, NFP, affects or makes the market react immediately. Most times, sometimes it could take up to 30 minutes, sometimes even an hour, right? Some reports like FOMC could take more than an hour for you to see, the impact or the market's reaction to that event. But just as the name goes, low impact, medium impact, high impact, you know what to expect. If it's a high impact event, then it's expected to bring about high impact movement of the market. Another thing you should look at is the forecast and the previous, right? So let's say last month's NFP was let's just go straight to NFP so that I just show you guys. So if you don't know what NFP is, the NFP is a key economic indicator that measures the number of jobs added or lost in the US economy over the past month. It excludes some sectors like the farming sector, private households, non-profit organizations, government sectors, and it's released monthly on the first Friday by the US Bureau of Labor Statistics. Okay, so let's say for this report, we're seeing 142 and the forecast is at 140, right? So if you have a forecast from 140, 141, 142, I wouldn't really expect much volatility because, I mean, it's almost the same thing, right? But if we have an actual report that is way less than this or way higher than this, then obviously I'll be expecting much volatility from the non-farm payroll. But based on the forecast, I'm not really expecting much volatility. If you get an actual report that is way lesser, then obviously you would see much volatility, or way higher than the previous, would see much volatility from NFP tomorrow. Now, NFP is important for, I mean, if you're a beginner trader, very important as well. It's important for you because it has a significant impact on the financial market, especially if you're trading pairs like Euro USD, GBP USD, and gold. Okay, the NFP shows you how well the economy is doing in terms of the job growth. Also, market volatility as well. It usually brings about spikes in currencies, stocks, and commodities because the NFP can shift expectations about interest rates and the US economy as well. Okay, so if you're trading GBP USD, Euro USD, most pairs that are, or most currencies that are paired with the dollar tomorrow, very important that you pay attention to NFP. And also, please confirm the timing. Make sure that your time zone is set to where you are at the moment, so you don't miss out on the NFP report. One of the things that you should, look out for is the report. If it's a higher than expected NFP, then it could lead to stronger US dollar, rising interest rates, and possibly a decline in gold prices. But if we have lower than expected NFP, then we could have a weak dollar, and it will also, probably boost the price of gold and other safe haven assets. Another thing you should pay attention to is volatility, because markets can become very volatile around the time of the, reports release. Try not to trade right at the release unless you're highly experienced or you've already determined your risk on that trade, and prepare for, wild movements up and down. You can call them whipsaws. Another thing you should do is to focus on the key levels, like the support and resistance levels. These are areas that I personally will be focusing on. And you can also keep an eye on other components of the reports, okay? Like the unemployment rates, the average hourly earnings, all that. You can keep an eye on that tomorrow. So we're going to go to the charts. Let me know if you got your answer and if you understand what I just explained. Someone asked about the impact of the news and how long it would last. Go to the charts right now. Guys, we've been following the dollar index for a long time. We've followed the dollar index for the longest. And if you're in the Octa Nigeria Telegram chat, if you're not there, please do well to join. And if you're there, you would notice that we conducted this analysis and I told you guys that the trend is your friend until it bends, right? Now, looking at the dollar index chart, obviously, you'd see that the trend has been our friend, but now it's bending. Let me know in the chat if you guys know what the dollar index is. Let me know in the chat if you know what the DXY is. So the dollar index measures the value of the US dollar against a basket of 6 major foreign currencies: Euro, Japanese yen, British pound, Canadian dollar, Swedish krona, and the Swiss franc. Basically, or in simple terms, the DXY helps you understand the strength or weakness of the dollar against these pairs. So if you're trading these pairs, you would know if the dollar is strong or week. All right. Let's see if you have questions. I don't really understand the question. Pairs you're able to trade. Let's see. Okay, you know what, guys? You can just ask all your questions, and then during the Q&A session, I'll answer all of them so I can have more time to look at that. But looking at the dollar index right now, obviously what we're seeing is a change in trend or a change in direction of the market. We plotted this triple bottom. We had multiple retests. The market tried to break below all these support zones that was created, but it couldn't. Obviously, if we broke below this zone, we're coming straight down to retest here, but we couldn't sustain any break below this point. And now we saw the market start to reverse to the upside. Just zoom in a bit for you guys to see. Now, these are the levels that I highlighted, and I told you guys that if we break above the 200 period moving average, which was supposed to be this, but again, we broke above it. So we're going to come to retest these zones, probably push up again and retest, but we're currently trading at this zone that I have identified for you guys. Now, what this means is that from the 30th of September all the way up to today, right, 3rd of October, the dollar has been bullish. Clearly, the dollar has been making some recoveries. Now, this is why it's important to understand the correlation between the dollar and other pairs. If you look at GBP USD, for example, you'd see that from that 30th of September, GBP USD has been bearish. The same thing for Euro USD, bearish as well. So if you're trading these pairs, it's important that you look at how the dollar reacts or how the dollar acts, and then you can use that as your bias to trade GBP USD. Currently, we are at a key level. Now, from my explanation of key levels, you would notice that the market has bounced from one key level to the other, and currently we are trading at this key level that I highlighted from the last time we had the live trading session. And usually what the market does at key levels are two things, right? We can either have a bounce at that key level or a break. Yes, I know some of you would say we can have a consolidating market, and it still results in two things. It's going to be either a bounce or a break out of that key level. Now, we're expecting the dollar to even increase more in value, you know, and probably push up and break above this zone. If we do that, we're still going bullish on the dollar across the major pairs that we'll be trading. I see someone talking about Euro USD in the chat. Yes, we're going to check Euro USD right about now. So, like I said, the dollar is gaining some strength, and we can say that there are some factors, two main factors why the dollar is gaining some strength. We're seeing the US Federal Reserve tighten the monetary policy, especially in the series of the interest rate hike. We've seen an increased interest rates, and this has made the dollar more attractive to investors. You know, what really happens when the interest rate is increased is it attracts investors. And currently in the United States, the interest rates are at their highest that it has been in 22 years. And the market is expecting a continuation of this interest rate increase, you know. Additionally, we have some global economic uncertainties that have increased the demand for safe haven assets like the dollar. So these are two main reasons I would say why the dollar index is increasing in value, and we're seeing some recoveries at this point, and I expect that to continue. Obviously, the market is not just going to trend and just make a spike or an impulsive move to the top side without making some pullbacks, but in the coming weeks, I expect the dollar to gain more strength and trade above these zones that I have highlighted. But until then, we're going to observe the dollar and observe the bullish signs that it's showing us. Tomorrow we have NFP. Currently, I don't really expect much volatility until the reports are out, and then we can see how the dollar index would react to that. I'll move to Euro USD because I have someone in the chat request for an analysis on Euro USD. Just go to the higher time frames. We're going to start from the monthly. Let's see. Guys, this is why it's important to pay attention to key levels in the market. The market kind of moves like a magnet. You know, when the market creates higher highs going up, on its way down, it would most likely respect those swing highs and swing lows that it created on its way to the top side. And also the highs and lows of candlesticks are also some of the things that you want to pay attention to in the market. Now, for this month, right, we've been bearish on Euro USD. As you can see, the most recent candlestick has been bearish. And obviously, this is a reaction to these areas of resistance that we have here. In the past few months, I think since, well, more than a year now, the Euro USD market has failed to break above these zones, and that's what we are reacting to right now. We're pretty bearish on that, headed downwards to make a retest at this minor key level in between before we come down for this one. I'm going to go to the lower time frames. There's nothing so much to see on the higher time frames like the monthly. If I'm going to be trading on the lower time frames, I just use the higher time frames for overall market picture and maybe major supply and demand zones. Let's go to the daily. Now you see, if you go to the lower time frame, okay. So guys, I was just saying, thank you everyone for staying. We just had a little technical glitch, but I'm back now. So I was just saying that we're seeing the emergence of a double top, and usually the double top signifies reversal from an uptrend to a downtrend. The same thing for the triple top or the head and shoulder patterns as well. These are indications of uptrend reversing to a downtrend. But again, looking at the current pattern that's been created right now, we've not had any break below the neckline, which is something that I'll be looking out for. A break below this support or this neckline that has been formed here. If we have that break and we get to retest this zone and we also break below it, then what I'll just be looking out for is a slight pullback to the top side, and I'll be able to trade Euro USD to the downside. But for now, we are currently reacting to this key level, which is going to be the neckline of this double top. As you can see, the market got to that zone, bounced, and started to push back to the top side. I'm going to zoom in and show you guys exactly what I'm talking about. Bounce, and now we're seeing buyers kind of try to push this market to the top side. So if you're the kind of person that likes to trade a range in markets, what you want to look out for here is the emergence of bullish engulfing or bullish momentum candlesticks, and you can just scalp some buys on Euro USD. I'll probably look at targets from this as a first target and also this as a second target. Give us a nice 1 to 2.5 risk to reward, but at least we have a 1-to-1 from your first target, or even slightly more than that. I think the first targets would be around, yeah, just let's say 1-to-1. That's if we see emergence of bullish momentum candlesticks, then we can obviously ride with that trend to the upside. I'm expecting this to happen tomorrow because of the NFP that we have, and then you can capitalize on that. So if you trade Euro USD, this is what you should look out for. If you trade GBP USD, again, the dollar is gaining some strength. I expect that to continue. But in the meantime, we're going to wait for tomorrow, see how the NFP turns out, and we can trade accordingly. All right, guys, it's the Q&A session. If you have any questions for me, please go ahead and ask me your questions. If you have any questions for me, this is the time that you go ahead and ask me your questions. You can do that in the chat. I also just I checked the chat right now to see if we have questions, but we don't really have any. So if you have questions, go ahead and ask your questions in the chat. USD. All right, let's check XAUUSD then. We previously analyzed gold. I expected a bounce at this previous resistance before we start to go to the upside. We almost did that, but at our previous resistance, and the market took off to the top side. Currently, XAUUSD or gold, XAUUSD feels long to pronounce. Gold is, consolidating, retracing, slowing down, and this happens usually after impulsive moves like this. We saw it happen here, boom, retracement. The same thing happened here, boom, retracement, just like that. When the market makes impulsive moves like this, we usually have, ranges or retracements or concerns happen around here, just like this. There are two important things that you want to point out: the high and the low. The highest point of that consolidation and the lowest point of that consolidation. Interestingly, the lowest point had a little bit of an activity. I'm just going to zoom in and show you guys. The lowest point has more activity because, again, the market danced around this point before breaking. Let me just highlight that. If I go to the lower time frames, you'd see what I mean by the market danced around. Let's go to, say, the 30 minutes time frame. Just give that a second to load up. Exactly. So you can see what I mean by the market danced around this area. There was market activity going on here, and now we've come down to make another retest. And what the market is currently doing is trading in between the highs and the lows. Just gonna drag this up. Now, if you use the ZapZone strategy like I do, you don't want to trade in the middle of these markets. You don't want to be caught up in the middle of a ranging market. You want to trade from, you have more, you'll be more comfortable and you'd have more confidence trading from a key level than in the middle of the market. You have more chances of making more profit as well. And you'd have, it's more like a confidence booster, trading from a key level than in between at the market. So right now, what I'm ahead of tomorrow's NFP, what I'm going to be doing would be to observe how the market dances or reacts to these zones, the 2685 zone and the 2626 zones. I'm going to indicate that. So these are the current and most recent areas that and lows, and this is what I want to pay attention to. Usually what happens in a consolidating market is when the market moves and then we start to consolidate, usually what happens is the more the consolidation, the stronger, and the market could break out from either sides. Okay, but you don't want to be caught up in the middle. You'd be more comfortable to see markets actions in these time frames. You want to be able to get in and get out, right? So you want to go to the lower time frames and take advantage of volatility on the lower time frames. So that's how you go about scalping. But what I do with the trend, okay? You need to create that awareness. Am I trading against the trend or I'm trading with the trend? It's a short-term move. But if you're trading with the trend, then all you need is a pullback and a continuation, and that's what you want to look out for. I'm going to take this one from Jambar. He says, I have another question. Say I buy Euro USD at 1.1120 with a stop loss 10 pips away, and they take profit 20 pips away. However, due to news, price suddenly pushes down to this. Now, since price is below my set stop loss, do I have to manually close the trade or will it get closed? So if you have a stop loss put in place, right, with Octa, I don't know about the question you're asking, but if you have a stop loss put in place with Octa and price gets to your determined stop loss level, Octa automatically closes that trade at your preferred stop loss. Okay, so you don't have to manually close a trade when you have already typed in your preferred stop loss in your Octa trading app. So I hope that answers your question. Give us an insight on how to scalp the markets. I just did. Using the higher time frames to identify overall direction, using the lower time frames to trade either in that direction or against the direction. But you need to understand that if you're trading against the direction, you're taking a risk and it's kind of a short-term execution that you're placing. Okay, guys, in the absence of any other questions, I'll just tell you guys to remember that I'm seeing one more question. How will I trade? I was just about to say that. So remember that you can trade and create a trading account with Octa. And when you're creating a trading account, you create Octa Trader so you can get access to amazing features like Octa Space. Let's see if I can show you guys that. Yes, you can get access to amazing features like Octa Space where you can get insights and analysis from expert traders, see what they're saying, and kind of merge that with your understanding of the market and potentially make profit from trades that you place with the combination of the experts analysis and your own analysis as well. Alongside what we have here, Octa Vision, which you can use. It's an AI tool that you can use to look at your daily trading summary, see what should have been done better, see what you can do or to improve your trading activity, see if there are anything or if there's some things that you missed out on while analyzing. At the end of the day, guys, it's about getting 1% better every single day. So you can take advantage of tools like this to increase your chances of making a profit in the Forex market. Again, there are awesome instruments that you can trade here. We also have with Octa Trader this pattern tool that helps you spot patterns in the market. Some patterns you may not be able to spot. The pattern tool helps you do that. If I let's say go to let's look at AUDCAD, right? Let's see. Okay, if I go, let's go to the higher time frames. Let's try gold. So basically what the pattern tool does, it helps you identify patterns in areas where you may not see those patterns. For now, we're seeing a ranging market. That's why it's not been able to identify any specific pattern in the market right now. But this is an important tool that you can definitely use to spot patterns that are being formed in the market, especially the ones that you may not see. So take advantage of this tool. Remember to create Octa Trader when you're creating an Octa trading account. You can use the link in the description to create that. After this session, you can check the link in the description to create that. You can also use 1 minute or even less than that to fill out the survey in the description. It was an amazing live trading session with you guys. If you have questions, please ask in the chat. I'll check back and we can answer the questions in the next live trading session or even in the chat as well. Thank you everyone for joining, and I'll see you in the next one.